Hello, welcome to the European Open briefing for Wednesday, February the 15th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So the dollar is currently trading at 2.5-week highs against the Japanese yen. We've got a bit of risk-on sentiment this morning following those slightly hawkish comments by Fed Chair Janet Yellen yesterday, where she signaled a possible rate hike at one of the upcoming meetings. Although the rally is rather limited, the dollar is currently trading above 114 yen. The markets are still not fully convinced that there will be a rate hike as early as March. The yen, though, is broadly weaker this morning after the Bank of Japan governor said that the central bank has no plans to raise its bond yield target. So the yen is lower against all major currencies this morning. And in other currencies, in the euro and the pound, they're down. They're currently trading near yesterday's lows, mainly from the stronger dollar, but also political uncertainty regarding the eurozone. And as far as the pound is concerned, we had, of course, those weaker than expected inflation data yesterday. So let's begin with the dollar-yen pair. We can see that big jump yesterday after Janet Yellen's testimony in Congress. She was testifying before the Senate Banking Committee, where she said that at one of the upcoming meetings, there will possibly be a rate hike. She said waiting too long to remove accommodation would be unwise, although she was still cautious about the economic outlook due to several uncertainties lying ahead. So we did see that big jump in the dollar, though it's currently stalled, though currently trading around 114.50 yen. As far as the futures markets concerned, for the Fed Fund futures, the implied odds of a rate hike for March rose only marginally from 17% to 13%. So that's still a far way off from the 50% needed to signal the markets that a rate hike is priced in for as early as March, and that's because Yellen wasn't too specific about March. He said that rates could go up at March, May, or June. Let's have a look at the Japanese bond yields. They spiked up slightly to around 0.1% early this morning. They're currently slipped back, currently trading around 0.09%. And this came after some comments from the Bank of Japan Governor Haruhiko Kuroda, who said that the bank has no plans to raise its yield curve target, which is currently around 0%. He said that inflation remains distant from the bank's 2% target, signaling that the Bank of Japan will likely maintain its current policy stance for some time yet, until there's more convincing signs that inflation is on a sustained path upwards in Japan. And the yen is broadly lowered today, especially against the Aussie and the Kiwi, which are both benefiting from that risk sentiment. Let's move on to European currencies. We can see both the euro and the pound fell yesterday. The pound had already been down by weaker than expected inflation data. Both headline and the core inflation rate in the UK missed estimates for January, although they were still up near 2.5-year highs. That's mainly due to higher fuel prices and, of course, the weaker sterling. Although the fact that they're not rising as rapidly as expected does ease the pressure a little bit on the Bank of England. Therefore, the Bank of England is able to maintain rates lower for a longer period of time, and that's hurt the pound, which fell below the $1.25 level. The euro, on the other hand, hit a fresh 5-week low this morning, mainly due to a stronger dollar, but also we have, of course, that ongoing uncertainty regarding the elections in key markets such as Netherlands, France, and Germany coming up, and of course the Greece's bailout review program, which has yet to be approved by its creditors. Looking at commodity currencies, we've got the Aussie and the Canadian dollar here in the charts. The Australian dollar It fell yesterday after the Yellen's comments, although it's since rebounded. There was some positive consumer sentiment survey data out this morning. The Westpac Consumer Sentiment Index rose by 2.3% in February, and this signals that it's another sign that both business and consumer sentiment is improving in Australia, and it reaffirms the RBA's positive outlook for the Australian economy for the current year. So the cause is currently it's rebounded sharply since that drop yesterday after Yellen's testimony, though up on the day it's just mainly unchanged at around 0.7676. If you look at the Canadian dollar, we can see here the dollar rose against the loonie after Yellen's comments, although again, like the Aussie, the Canadian dollar has paired those losses. The loonie is being supported by steady oil prices in recent weeks, and of course that receding fears that Donald Trump would impose trade tariffs on Canada. Donald Trump currently seems to be mainly targeting Mexico in terms of the renegotiating the NAFTA trade agreement. So the loonie has been making some gains on the back of those receding fears. Let's move on to today's economic calendar. We did have the central bank decision from Sweden. The Riksbank kept its main rate unchanged at minus 0.5%. Although both inflation and economic growth in Sweden are improving, the central bank there is still worried about the outlook, and he said that rates are more likely to be cut than to go up. So that had knocked the krona a little bit, around 0.5% against the US dollar. Coming up later today, we've got UK unemployment data, and then it's going to be a busy US session. We've got inflation and retail sales coming up, as well as industrial output, plus manufacturing data out of Canada. But of course, we also have that Yellen's testimony, her second day of testifying before Congress, and also the Philadelphia Fed President Patrick Harker is also due to speak. So those would likely get some attention as well. That's it from me. Thank you very much for watching and have a great day.